What are the mechanics of a price cap, and would this actually work?
Yeah, it's incredible to think that Russia's making more money now in 2020 that it was 2022 that it was making, last year from oil. What we've seen is about a 1 million barrels a day reduction in Russian, crude exports. But of course, prices have increased, 50%, this year. In terms of what the G7 is really trying to do is, they're trying to really ensure that Russian oil supply continues to flow, but really bring down prices to really hurt the Russian economy, and to do that through a price cap. And the way this would work is that any country that exceeded that price cap would basically be shut out of the insurance markets, which would basically prohibit about 95% of tankers really, trading or using Russian crude in those tankers. So, through the price cap mechanism, I think they're trying to, not necessarily prevent the flow of Russian oil markets, but just really to reduce the flow of revenue back to Russia. Now, whether or not this will work is a key question. Obviously, there are other options for insurance. There's questions around, what OPEC would do in response to this, and what the right level of price would be. Is this a G7 price that they believe that the oil prices should be trading at? So there's still lots of questions around how this would work in reality.
Exactly. So what do you think the right price would be if they were to go ahead and set this cap? And ultimately, what impact do you think it would have on broader pricing if we saw those volumes being protected, but a limit set on how much that would actually cost?
Yeah, I mean, effectively we create a two-tier market, but in terms of what price the G7 would decide is acceptable for Russia, I mean, we still don't know what that would be. Of course, it would have to be higher than the cost of production, but that's a very low number. So we just don't know at this point what that would be.